Hello and welcome to the latest Octa Members podcast with me, financial journalist John Lappin. Today we're talking to the Communications Director at the Association of Investment Companies, Annabel Brodie-Smith, about recent interesting events in the investment trust sector where a hedge fund is bidding to take over some of the trusts and calling for various votes. Rather than me go on about the details of it, though, we're going to talk to Annabel about that and ask some questions today about what is effectively a running news story. So Annabel, hello, how are you anyway?
Great to be here, John. I'm very well, thank you.
Great. Okay, so first of all, I wanted to get your view on what is actually at stake with Saba's bid to take over these trusts and, as we know, make huge changes to boards, strategy, and more.
Well, the future for these trusts would be very different indeed if Saba took over. Let's just be clear on what their proposals are. They've requisitioned a general meeting, so they put forward proposals. Shareholders in these trusts have to vote on those proposals. And they're proposing that they would put in place a completely new mandate, that these trusts would invest in other discounted trusts. And they've also said they might merge them together, but it's quite vague in terms of the mandate. They're proposing a completely new board, so the existing board would step down. They've said they're going to put in place 2 directors. I have to say 2 directors is an incredibly small board. None of our member companies have only 2 directors. Those 2 directors they're proposing, one of them is from the management group Saba, and obviously the other one is proposed by Saba. So, listeners might have some concerns about the independence of that board. They're also then proposing that Saba is going to manage these companies. And of course, they'll have a new fee structure. So I think in essence, what they're proposing is a takeover. It's not an official takeover, but effectively, the effect is a takeover of these companies.
Okay, so where are we in terms of what shareholders in these trusts should do? I believe you are encouraging as many shareholders as possible to vote about these issues and these matters.
I think the really important thing to understand is Saba is targeting investment trusts. These 7 investment trusts all have high retail investors in them. And they're doing that for a reason, because traditionally, these private investors, advisors, and their clients, they haven't been very active at voting. So Saba has got stakes of, up to 30%. They can't have more than 30%, otherwise they have to launch an official takeover. But, in the high 20s, high 20% in these companies. So I think for advisors and their clients, it's absolutely vital that they vote. They have to have a say on the future of their investment trust. They have to look at the proposals and weigh up what they want to do. And I think it's essentially quite an easy decision. Do you want to be a short-term speculator or a long-term investor? And if you look at the proposition that Saba has, it is very difficult. You think about advisors, they've selected these trusts on their clients' risk return profiles, they've looked at what they've wanted in great detail. And we're talking about trusts that perhaps are investing in US growth companies now would suddenly become a vehicle invested in other discounted trusts. So I think if they've got to understand those proposals, but it is vital that they vote and have a say on the future of these investment trusts. Otherwise, they will not exist as they have been now. It's important that I say it is quite complicated because 2 of these trusts have already said that they are winding up. So one of them actually had a proposal to give cash back to investors on the table. Now this has come along, they've had to drop that, they've had to do this, they will have to do this vote, and then their intention is to go back to that wind up to deliver cash to those investors. The other trust has again said it will offer cash to investors, but at the moment it has to deal with this vote. And Saba has said they will offer a cash exit to investors in the trust if they win over the next year. So it's quite a long time period. And I think the thing that's really interesting about these investment trusts that are being targeted is how different they are. And I think the common factor is the high retail investors, which obviously is helpful for Saba because obviously they think that's an easy way to approach these trusts and get hold of them. But, we've got companies investing in everything from, as I said, US growth stocks to European smaller companies to UK sort of growth companies. I mean, it's a very, very wide and scattergun approach. But clearly Saba see this as an opportunity to make money for themselves.
Okay, so what's the role of advisors in this if they've recommended investment trusts to clients and they are invested in some of these 7 trusts? What do you want advisors to do, or what would you be suggesting advisors do? Yeah.
Yeah, what I want them to do is to look at the proposals and think, does this work for my clients? Am I comfortable with a board of just 2 directors? Initially, given that investment trusts always have 3 or more, am I happy with that? Am I happy with the independence of these proposed directors? Given that Saba's already said it's intended to manage them and to be the manager of these trusts, we've got 1 manager and 1 person proposed by Saba. Am I really happy with that? I think they've also got to think about, Saba's total change of strategy for these investment trusts. The advisor's done a lot of work in selecting this trust specifically for their clients, and suddenly that mandate could completely change to invest, as I said, in discounted trusts. I mean, also, I just think some of these trusts, their underlying assets are in unquoted companies. And I think that's, again, a question, what is Saba going to do with these unquoted companies? SpaceX is a very big name, Bailey Gifford US Growth Trust, big holder in SpaceX, as is Edinburgh Worldwide, another one of the targeted trusts. How are they going to manage those companies? Do they have experience in this kind of investment? And then actually, as I said, you've got to think about for your clients. You've got complete unknowns here. You've got the manager might change. The impact on their reward profile is incredible. And the last thing, I just think if you're in the trust with the cash exits already on the table, what in addition is Saba offering you? Because you've already got a cash exit. But the really important thing is they weigh those up, they make a decision, and they actually vote.
Okay. So there's been a lot of media coverage around platforms and platforms facilitating votes. Obviously, most are now doing so, and I think there was a big change recently. What's the position around that? And
Well,
I'll answer that first, and then I have a little follow-up on that as well.
good. Well, I mean, the situation is concerning because at the moment, the platform industry generally has been very good on this, and they have written to their shareholders of these trusts because it's such an important vote, and they've made it, encouraged them to vote and engage with them. But that doesn't apply to all platforms. We've got a number of platforms which will not allow their shareholders, and I have to say, a number of advisor platforms where shareholders are not allowed to vote. We had Scottish Widows and a couple of other stock trade. They, thank goodness, put in place a workaround to allow the advisors with investment trust holdings to vote on those platforms, but not all the platforms have. Outrageously, some of the platforms charge to vote. So, and we are very concerned about this. We have written to the FCA about it. Obviously, as a result of that, the FCA has written to the main retail platforms. But this is clearly a wider issue, which is why we are arguing for a change of law that makes it mandatory and compulsory for the platform or the nominee account holders, that could be a wealth manager Or, we've had instances of advisors coming to us saying, we hold these investment trusts through an offshore bond wrapper, and the life company is not allowing us to vote. So whoever the platform or the nominee is, they have to pass on that information, and they have to allow these shareholders to vote.
Okay, so that's an immediate thing and actually a slightly longer term thing. I get
That's a
the impression.
longer
Yeah,
term thing.
yeah, sure, sure. So you would like everyone to allow this now as far as they can and work on workarounds, and but also you want this to change in future. Okay, we're mostly sticking to the immediate stuff, I suppose. So, can you tell me what the AIC's role in all this is? What's your freedom of action and in terms of, well, talking about this whole subject, what's the role in terms of the AIC?
Yeah, well, we are the trade association for investment trusts. So, we are there to promote our members, but to lobby on behalf of our members and engage with obviously the FCA and the regulatory authorities. So, we're there to promote, support, and engage. So, what are we doing on this? Well, we've obviously been talking to our member companies. It's essential that we encourage all shareholders to vote. But we're also looking at, we have where we've had emails, we have been interacting with platforms and making it very clear that we think that they should allow those shareholders to vote on those platforms where they're putting up some barriers. But also, of course, we're looking at the regulatory implications of this. And we have written to the FCA because we are concerned about this platform situation. How is it that we're just relying on platforms to do what they think is right, that they're not obliged to do this? The second area we've written to the FCA on is director independence. How is it we've got, clearly a big shareholder with a potential conflict of interest, potentially appointing directors, and they've already said their intention of that big shareholder is to appoint themselves as the manager. I mean, I think that there are some really alarm bells ringing here on corporate governance and independence of directors. So we have written to the FCA on that too. So, that is our role as the trade association here. We want to get our shareholders engaged on this issue and thinking about it, but we've also got to look at the long-term regulatory implications.
Okay, so just playing devil's advocate a little bit here. Obviously, there will be people who say this is simply keeping the sector on its toes. It might narrow discounts. And isn't that in certain ways the nature of the beast? Companies, including investment companies, they can and do get taken over. So isn't this really just an example of that happening? And it's yeah.
But you're right. They are absolutely right, John. They are Darwinian in nature, investment trusts. It is survival of the fittest. They evolve and change and wind up to meet shareholders and investors, needs. That's what they do. They respond to their needs. Now, corporate activity and activists, we've had activists in the past. I think that's fine. They're another shareholder. They're there. They maybe want to narrow the discount, make some money. I think the different thing about this and the unique thing about this is that this activist actually wants to take over these companies and manage them. And that's very different to the types of quite, welcome activism that we've seen in the past. The proposition is very different. I mean, investment trusts have been evolving and changing, and directors, they have been very proactive in delivering for their shareholders. There's a general trend that people want larger, more liquid, more cost-effective, and hopefully better performing investment trusts. So, this last year, we saw 10 mergers. It's a record for investment trust mergers. We saw 7 liquidations, trusts winding up, giving back their money to shareholders. If that's what they want, that's what they've got to do. We've seen record share buybacks, trusts buying back in their shares to enhance their NAV, deliver for their shareholders. We've seen 32 trusts cut their fees, again, delivering for their shareholders. So they have been very proactive. And I think what we're going to see going forward is more of this type of proactivity. So yes, you're absolutely right. It's survival of the fittest in the investment trust industry. But quite honestly, this type of activity is very different.
Okay, so question specific to the Saba issue. Do you think this could rumble on for much longer in 2025? We know certain things are coming to a head with votes very soon, but could this go on longer, especially, of course, because of the fact that Saba actually own shares in other investment trusts as well? Maybe they could come into the, into play, let's say. And
Yeah,
yeah, so what's your view on that? For the rest of 2025, could this be a thing that continues?
it really could be, quite honestly. Of course, we've had one of the votes, Herald Investment Trust.
Mm,
The shareholders of Herald rejected Saba's proposals and supported the board. But clearly, Saba now holds a nearly 30% stake in that investment trust. And the question is, what happens next? It
mm,
happens to be that Herald has a continuation vote coming up in April, so there will be another vote then. Clearly, we don't know what Saba wants to do. It seems unlikely that they want to hold this trust indefinitely.
mm,
And one would think they would be looking for an exit at some stage. But, so there's the situation at these 7 trusts. But in addition to them, Saba has holdings in 21
mm,
other investment trusts in the industry. And again, they're over a selection of sectors. There are 9 smaller companies type sectors, but it's a selection of sectors, 21 of them, and potentially, of course, they could requisition more of these general meetings, put forward more of the proposals at these companies. But I have to say, and I think your listeners really need to take this on board, it is a buying opportunity. Saba are seeing the opportunity. They are buying these investment trusts. The average discount at the moment is 15%. It's pretty wide. I mean, the performance, and clearly performance will always vary from sector to sector, and you need to do your research. But the performance, over the last year, it's up 11%. Over 5 years, it's up 30%. Over 10 years, it's up 126%. Performance is generally good, and it is a great opportunity to buy these trusts at a discount. It's likely that the discounts will come in, performance should get better. We're obviously hoping that the macroeconomic conditions here in the UK, we've got very high interest rates. If they come down, that will be helpful for our investors. But also, they've got the possibility of corporate activity. They've got the possibility of activist activity. They've got Saba, and they've got boards themselves taking action to narrow those discounts. So it really is a great opportunity to invest in investment trusts.
Okay. Wow. Well, of course, and I know you've been making that case for a long time, Annabelle. We've chatted about it over the years, not too many years anyway. Can I ask sort of, so you slightly answered this, but this is just my final question. The long-term effects on the sector of these recent events, what do you think they would be?
You've made me laugh, John, because it really is quite a lot of years, actually.
Years, yeah.
But yeah, but anyway, the long-term effects of the sector, I think what we're going to see is larger, more liquid, I said, more cost-effective investment trusts. I think that's going to be an outcome. I think we're going to see boards who are very proactive on discount management. So therefore, I think we're going to see more share buybacks, more tender offers, more cash, more exits for investors. I think we're going to see a focus on marketing and promotion and getting the message out there for investment trusts. And ultimately, and you will say that I'm bound to say that, but ultimately, I think this sector will come back stronger. Our performance is good at the moment, but with those discounts, if those discounts narrow, it's going to be a massive boost to performance for our shareholders.
Okay, Annabelle. Well, thanks very much for talking us through these issues today. It was very interesting indeed.
I loved it. Thank you very much for the opportunity.